Okay, welcome back, everyone. Let's dive into the latest developments. We've gathered a range of sources covering business, the economy, and politics, focusing particularly on what's relevant here in Malaysia.
Exactly. And our goal, as always, is to help you quickly grasp the key takeaways from all this information and, understand what it actually means.
Right. So let's jump straight in. We've got some interesting company news coming out of Malaysia. First up, 99 Speedmart.
Ah, yes, they've extended their operating hours. That's expected to give their revenue a little bump, maybe 1% or so.
And significantly, the EPF has bought in, taking a 5.02% stake.
Mm-hmm. That's a notable move. Also seeing Ancom Nylex aiming to take full control of the delisted Nylex. It's through a capital reduction, paying out about 5 cents per share.
And on the expansion front, Chinwell is buying land quite a bit, actually, in Seberang Perai for over RM 48 million, building up their land bank, it seems.
Then you have Ecomate looking to branch out. They're planning to buy 60% of an ICT company, PCS, a diversification play, alongside some bonus issues.
It's not all expansion, though. Gadang looks like it's taking a hit around RM 19 million from pulling out of a joint development in Cyberjaya.
Right. And some are navigating trickier situations. K&M Group, a PN17 company, is proposing creditors waive a huge chunk of interest, RM 182 million, as part of its restructuring. Selling assets, too, like their German unit.
Oh, Mesti is also doing some financial housekeeping, share issuances, capital reduction to tackle debt and losses.
And finally, Scientex Packaging. Their profits were down, and they've decided to pull out of Myanmar because of the instability there.
So, yeah. It's quite a mix, isn't it? Some growth, some strategy shifts, but also some restructuring and challenges.
Definitely a mixed picture across the board for Malaysian companies right now.
Okay, let's broaden out a bit to the Malaysian economy and political landscape based on these sources. The expanded SST, sales and service tax, kicked in July 1st.
Yeah, that's a big one. The idea is to widen the tax net, right? So 5 to 10% sales tax on some selected goods, and more services are now taxed certain types of rental, construction, finance.
Healthcare and education too, but mainly for non-citizens or the high-end stuff, beauty services as well.
Exactly. But crucially, essentials are mostly exempt. So it's boosting government revenue, hopefully without hitting everyday costs too hard for most people.
Also, on the government side, remember that mobile data collection plan approved back in 2023 by MCMC and DOS?
Right. For planning purposes, getting insights into population, economy, ICT trends is all anonymized and aggregated, they say. No individual opt-out, though.
And how's the overall financial health looking? Well, international reserves went up, increased by about US $500 million end of May.
Yeah, sitting at US $119.6 billion.
Yeah.
So that suggests, a degree of underlying stability even with these policy shifts.
Okay, but the market sentiment seems a bit, less rosy. The recent 1Q 2025 earnings season was apparently quite disappointing.
That's right. And it's led analysts like at CIMB and Maybank Ivy to actually lower their year-end targets for the FBM KLCI. Maybank even downgraded the banking sector to neutral.
So what does that tell us?
Well, connecting the dots, it suggests some headwinds for the local stock market. But it's not all gloom. Foreign funds have been buying Malaysian bonds.
Oh.
Yeah, quite a bit. US $2.9 billion flowed into conventional government bonds in May, probably linked to bets on rate cuts globally and a weaker US dollar. Also some chatter about the ECRL spur line potentially benefiting companies like IJM and Muhiba.
Interesting contrast there. Let's look internationally now. China's economy is still facing some issues.
Yeah, consumer deflation continued in May. That's 4 months now. Factory deflation, too. And these price wars are really heating up, driven by, weak demand at home and trade friction.
But lending picked up. New yuan loans apparently tripled in May from April.
They did. Back to last year's kind of pace. Maybe helped a bit by that temporary U.S.-China trade truce and some monetary easing from Beijing.
Speaking of trade, U.S. and China are talking again. London, today actually.
Following up on that Geneva agreement, rare earths are definitely on the agenda. China's exports of those recovered a bit in May, but tensions are still pretty high overall.
And quick check on Europe.
Bank of England's Megan Green sees disinflation continuing despite maybe a short-term inflation rise. And the ECB seems pretty comfortable where they are with rates, aiming for that 2% target.
Okay, globally, sounds like investors are still looking for yield outside the big traditional markets.
Absolutely. Emerging market bonds are seeing huge demand. US $331 billion sold so far this year, partly chasing yield, partly expectations of rate cuts in emerging economies, and that weaker dollar helps too. And interestingly, OPEC plus output hikes. Morgan Stanley says they haven't really flooded the market with supply just yet.
Right, okay. So bring it all together. We've covered company moves, policy shifts, market feelings, global dynamics. What stands out to you as the most maybe exciting or significant piece of news today?
For me, thinking about positive signals, it has to be that huge inflow of foreign money into Malaysian bonds, that US $2.9 billion in May.
That really caught my eye too. Why is that so significant?
Well, the sources highlight it's the biggest monthly inflow since way back in October 2013.
Wow, since 2013. Oh,
Yeah. So despite maybe some caution in the local stock market, it shows that global investors, they see stability and value in Malaysian debt right now. They might be positioning for potential rate cuts. It's a strong signal from international capital.
a strong vote of confidence, definitely. That's a really key point to take away.
It is. So today we've touched on quite a spectrum, haven't we? From individual company adjustments here in Malaysia to big government policy moves like SST and data collection.
To the broader market mood and how global forces like China's economy and international investment flows are all interacting.
It's definitely a complex picture, but looking closely at these different pieces helps you see the connections and how they might impact things around you.
Absolutely. Keep exploring these topics, keep digging into the sources.
And make sure you subscribe to the deep dive so you don't miss our next look into the information that really matters. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.